don't. Okay, so big uptrend. No. Hello guys. Okay, so okay, we started. As always, guys, if you have any questions, feel free to message in the chat. So, like reversal like patterns. Like so there are a few reversal patterns I want to tell you like about. Let me open my notes really quick, and we're gonna start. So I've been saying about like reversal patterns in previous lesson, but let's remind it quickly. Okay, let me open it really quick. Yeah. So first of all, like you have to understand. When we're talking about like reversal, it's never gonna happen like inside, like on lower time frame. We're talking about like only like high time frames. So if you want to like spot reversal, you have to work on like high time frames. You can look at like 1 minute, 5 minutes, but like real movement, like real move, will be spotted only on like at least like 1 hour time frame. And the high time frame better, because you will be able to spot reverse and these patterns and like method that I'm gonna show you will work better on like high time frames. So if we're talking about like 1 minute, 5 minutes, yeah, you can see these patterns that I'm gonna show you, but it's not obligated that this pattern is gonna work. But on 1 hour, 4 hour daily time frame, like there is a high chance that this will happen. So like one of the like first of all, you have to know like about like POI. Like POI, it's like point of interest. There's a zone where you expect like some reaction, where you expect like reversal or some sort of reaction. Best example like from now that like this trade that I was in, I cut it at like 1 to 2, but but still it was like nice example. We have like this like move. This is higher high. Then we had a shift on like 1 hour, lower low, lower high, lower low, and now waiting for formation of new high low. So how like to spot it? Like we needed some point, some zone where we expected some reaction, right? It can be order block, it can be Fibonacci gap, it can be breaker block, it can be some liquidity sweep, like zone like where you expect the price to like reverse. It just can't reverse out of blue. No, it cannot happen. It always happens in like some area where you expect it, like all the time. Like it helps. So it's just basically you just can't reverse like without the reason, right? So it just need like fuel or like need like some orders that like inside of like this zone, etc, etc. So here we go. Example, euro. Like we're sporting like this area, like we're using premium discount. You have to use premium discount like a Fibonacci retracement tool all the time. It's gonna show you where is premium, where is discount. You can also use indicator price action to look at indicator, but to make sure, I highly recommend to use the Fibonacci retracement. You identifying swing high, swing low, and using Fibonacci retracement from top to bottom. When we're talking about the downtrend, and from bottom to top, like here, when we're talking about like an uptrend. So in this case, everything that above like 0.5, it's called like premium. This is discount. So as soon as price, like what we can have, like first of all, you have to look. We have a downtrend. I need a zone where price most likely will reverse. Usually this zone has to be like, if we're talking about downtrend, in a premium, right? What zone like do I have in the premium? By looking at the chart on daily time frame, 4 hours, like 1 hour, I found that I have like this daily fair value gap. This daily fair value gap can be seen on like 4 hour time frame, like multiple fair value gaps, and on 1 hour, multiple fair value gaps, and also order block right there. This order block, this one, this one. This extra layer of confirmation, you can extend it. If we're talking about order block itself, this one, this order block. Let me use this line. Here you go. So as a result, what happened when price like came into this area? We got like reaction, price order balance, and what also happened? We're using like premium discount and Fibonacci retracement. We have this zone 0.779 where usually reverse happens in this area 0.779, and as a result euro like went down. You can jump on lower time frame to see like reversal, but this is how it's done. Like basically we come into the 0.779 area. This is like where you expect like for a reverse. If price goes above, that's it. Then this zone like invalid, and most likely we're gonna have liquidity sweep or a continuation of this movement. Because look at this, we have a shift here, and price like slowly been going up. What can happen here? Price can just bounce, right? And if we break above here, most likely it will go all the way up. But we got reaction from this area, this huge area of resistance, and as a result we went up, we went down. If we will get reaction from this area, which is like a huge area of support, like it's a supply area, like where like a lot of bullish zones, it's a fair value gap, breaker block, and all this kind of stuff. Price can reverse here and keep going high. It's possible too, but we got reaction here. It's a nice short. You taking profit, like move on. When we're talking about reversals of like, first of all, so like first thing that you look at like premium discount, and you look at the POI. It can be fair value gap or order block, breaker block, mitigation block, anything you want to. No, mitigation block now. Breaker block, order block, and fair value gap, right? So like every asset like has its own specifics. So German 40 can reverse in fair value gap or order blocks. Gold usually order blocks on the euro fair value gaps. British pound order blocks. So like every instrument has its own specific. Remember this. Okay, now reversal pattern. So let me see. 3 drive pattern, right? Like let me show you example. This reversal is not like ready yet, but pattern already formed. So this is like when you have like 3 highs after highs. So if you want to open like short position here, be my guest. You can do it. But we have like 1 high, second high, and third high. We're not talking about like this high because this move wasn't formed, and we didn't have shift on lower time frame. Like on lower time frame here, we had a shift and manipulation with lows. With this high, we didn't have it. It was just like pump that ended up in like one day, right? So we have like these three highs. So next move that should happen, so like I'm gonna enter position, it's gonna be absorb of this entire candle and breaking down below this low. As soon as this is gonna happen, I'm gonna enter like short position. Also, what can also help us, this is like trend line. Not this, from this low, touch of this trend line will mean it will mean that we're gonna have like downtrend, right? So we're breaking this trend like on lower time frames, and price will go down, but it will take all this liquidity, like this one, this one, this one, something like this. Like schematically, we're talking about like 1, 2. We can have liquidity sweeps from previous lows, but the idea is like forming cascade with highs after highs, and forming cascade like so each low will be higher than previous one, and by doing this usually price goes down. So another like reversal pattern, you probably heard about it. It's the most common pattern that you've seen and learned over the years. It goes like 3 top setup or head and shoulders. So this like pattern, I mean, like this one, this. This is head and shoulders. Like classic head and shoulders, it means like we already have shift here, and second shift, which is like already break of structure, and move upwards. Ideally, you have to have like on like after this move that forming change of character or like market shift should have like fair value gap. So if you have fair value gap right there, so most likely price will keep going in opposite. So it already was a clean move. We have a like nice intention to move in this direction, in this case like upwards, and the price will continue going like in this direction. So like how to enter like in these positions, it's like few possible entries on this like fair value gap, right, with a stop below this low. Second entry on the second breakthrough, stop gonna be here, or like the most aggressive one is this low. Make sure the head should always take liquidity like from some important levels. It can be time liquidity, it can be day liquidity, like, so it can be like time liquidity, which is a previous daily, weekly, and monthly high and low. It can be session liquidity, so like manipulation to take liquidity from previous session, and it can be it can be as like swing liquidity. So like when we're taking liquidity from like important swing. Examples. Here we go. It's not a head and shoulders. Actually, like 1 hour. No, it's not head and shoulders. I remember like one great example was on BTC. No. Not that clean. Not possible. This is a Wyckoff. It's hard to find clean example. No, I want to find a classic one. Yeah, here we go. If I jump on lower time frame, it's gonna be like something like this. Yeah, this one is kind of nice too. One, two, three. Also, there are like two types with head and shoulders. When second shoulder breaks, so it's basically reversal, right? Something like this. When second shoulder breaks, we have a church, or we have a trend line, and head like taking liquidity from the left shoulder and then moving like downwards, and it's a liquidity pool. But the problem with this type of like reversal pattern and like pattern itself, it can just like stuck you into the trade, because it can be just liquidity sweep and then move upwards. So like in this case, like if we remove like this right side, what can easily happen when we see something like this is manipulation. Price can take liquidity and then move upwards and absorb this entire move. So you have to be careful with this pattern itself. But when you see clean shift and then break of structure, it means most likely this is a true reverse pattern, and you will see continuation, because trend itself is more important than anything else. Yes, liquidity is important, but if you have like uptrend and we have targets like further, like we have uptrend and we have like target like higher, most likely price gonna like will keep going with the trend, because it's extremely hard to change a trend rather than just like do manipulation and take liquidity. Do you have any questions, guys? Like let's make a conclusion. So for like reversal has to be like premium and discount. Like we will look in, yeah, like let's write it down. So for reversal, what do you need for reversal? Reversal. What do you need for reversal? Let's clean it. Has to be clean. So you always keeping an eye. It's the first important thing. Premium and discount. Right? Premium and discount. Then liquidity. So it has to be here. Yeah. It has to be like liquidity manipulation, or liquidity like higher or lower, like the sort of reversal for further movement. So it can like reverse by itself without like possible target in the future, right? Liquidity 3 POI, obviously, like it has to be like in the POI, like reversal POI. It can be fair value gap, breaker block, order block, or just liquidity pools, such as previous daily high, previous weekly, previous monthly high, etc., etc. And number 4, reversal patterns. It can be when we're talking about the classic, it's like 3 top, 3 top setup, head and shoulders, or 3 drive pattern. What else? Let me see. No, like 3 top step with head and shoulders, 3 drive pattern. 3 drive pattern. It's like 3 highs in a row. Double top bottom. It's like this one. So palm, liquidity sweep, shift, but it's like itself. It's like head and shoulders. So basically you have like one shoulder, second one, and just like type of like head and shoulders basically. But this is like one of the reversal patterns anyway. Okay, yeah, pretty much that's it. So like ideally you have to wait for the trend shift. On lower time frame. So you're looking for on lower time frame, you see like for like trend shift and etc. And pretty much that's it. This is like what you like looking for, what you're looking at when you're talking about like reversal. Pretty much that's it. Do you have any questions? If you don't have any questions, guys, thank you for watching. As always, you can check the stream in class recording section. I have plenty of lessons, plenty. But probably like the most important, it's like structure, liquidity, and premium discount. These 3 lessons probably like must have to watch if you want to start trading. You are obligated to watch them. Like these 3 things, like premium discount, structure, and liquidity, these 3 topics must have to learn, like just must have. This is basically like basic. Yeah, like you can also learn how to calculate position size, how like risk management. But when we're talking about like chart and like price action itself, it's only these 3 topics. Liquidity grabs, it's easily. It just taking high, like so like real high, new high, or like real low, new low, new previous low. So for example here, how can you spot? We have a session liquidity, right? We have London session liquidity. Look at this. I'm gonna mark it for you. This one. What happened? As soon as we took liquidity, we got reaction right away. And this was my first short today on the stream. Then a lot of people put their stops right there. We had manipulation with session opening. This is like session opening, right? This low. It's also open range, this one. And move activated a lot of stops. It was a fuel for a move upwards. What happened? Move upwards. After this, like activated stops here, it was a fuel to move downwards. And this was my second short after testing this 5-minute fair value gap. Yes, it gives you. Yes, toolkit gives you like you can see this one and this one. Yeah, it's liquidity grab. So it's shorts basically, it's longs. Yeah, but like it basically like you have to like understand like why it happens, right? Okay, guys, thank you for watching. I have to go. Have a good evening or time of the day. Bye, guys.